Welcome back. Eye on the economy. The first look at the fourth quarter GDP yesterday showed that the economy grew 2.6% in the fourth quarter. That was better than the 2.3% estimated for the GDP report. Joining us right now is the former CBO Director, former McCain Economic Advisor, and American Action Forum President Douglas Holtz-Eakin. And Doug, you are the man of the moment. Thank you so much for joining us this morning.
My pleasure.
Yeah,
Thanks for having
and
me.
I say you're the man of the moment because of your report about how much the Green Deal is going to cost. We're going to get to the $90+ trillion price tag in a second. But first, let's talk about growth for the economy. Your reaction to what we saw yesterday. Now we're looking at an economy for 2018 growing 2.9%. Of course, we'll get some revisions on that number.
Sure. Look, I'm really pleased with the report yesterday. If you look at growth as fourth quarter over fourth quarter to take out any seasonal effects, we've seen growth really ramp up steadily. 2016, 17, 18. It's now 3.1% at 4 over 4. That's very strong. Inside that top line, I think, is something that people are missing. The household sector has been incredibly solid. It's grown between 2.7% and 3% every year for 4 straight years. And so we've got a lot of momentum going into 2019. Business investment faltered a bit in the third quarter, came back in the fourth. That's very promising. It's way above what a lot of people had forecast. I think if we get some, just a little bit of solid housing growth, we've got another good year in front of us.
All right, let's get to the Green Deal cost, because I know the panel wants to get in here, too.
Yeah.
Growing concerns about the soaring federal debt. The proposed Green New Deal would add to it big time. The plan will cost an estimated $93 trillion, according to your analysis that you came out with this week. The president spoke about the proposal last night with Sean Hannity. Watch this.
$100 trillion, and you couldn't do it for that. Yeah. But it's not even the money. It's so ridiculous. No planes. Let's not fly anymore. It is crazy. But personally, they should go with it. I love it. It's one of the greatest plans I've ever seen. As long as they're the ones that have to sell it, not me.
So, Doug, tell us how the American Action Forum, your group, came up with this. How'd you arrive at $94 trillion?
Well, we took the proposal seriously, as we do with all the proposals that come out. It's a 14-page list of specific projects that they would envision undertaking. It really comes into just 2 groupings. There's the green part of it, which is an all-renewables electricity grid, about $5.4 trillion to get that done. There's the high-speed rail and other ways to have a zero net emissions system for transportation. And then there's a retrofitting of every building for very high energy standards. That's a lot of money. That's the green part. There's also in there a huge amount of economics. There's a universal health care program. There's a guaranteed jobs program that could cost up to $44 trillion. There's guaranteed food for individuals. So there's a lot of going on in this that's not really just about a clean energy supply system.
And Doug, it's Dagan McDowell. I want to get your reaction.
Hey,
Jay Powell, the chief of the Federal Reserve, was asked about this week on Capitol Hill. This notion that the national debt and budget deficits won't be an issue and the Federal Reserve can essentially help fund these projects, keeping interest rates low, even maybe monetizing the debt. We can just keep issuing debt. Maybe the Federal Reserve can blow their balance sheet out again by buying it up, all to fund the Green New Deal and these pie-in-the-sky projects. He basically threw cold water on it, Jay Powell did. What do you say to these notions that we're getting from the left and the likes of AOC?
So you're getting this thing they call modern monetary theory, which I don't really think makes a lot of sense. But the idea is that somehow the Federal Reserve can just continually buy the debt, monetize everything. You'll face no real risks of inflation, which is a bit perplexing. And as a result, you don't really have to pay for any of these big programs. The problem is, when you get down to the basics of economics, someone can either work in the dry cleaner or they can be in the high-speed rail, but they can't be both. And so if you keep adding projects on, eventually you strain the resources available in the economy and you start to suffer the consequences. There's no financing mechanism that can disguise that. So what our estimates say is this is an enormous amount of economic resources that would be devoted to these efforts. They're going to have to come from somewhere. Do you really want to do that?
Doug, John Steinberg, looking at the headline numbers for GDP growth, just want to ask you a question about that. We saw a bunch of, in your comment about business investment being a little bit light, we've seen a number of companies issue weak Q1 guidance on the idea that there was weak sales, Box, Dropbox, a host of other enterprise software companies. Is that a little bit of an overhang? Is Q2 going to be even stronger now with the shutdown behind us and people back buying products and services?
I think we saw some real diminishment in confidence in the economy at the second half of 2018, particularly in the C-suite. If you look at CFO surveys, CEO surveys, there's a big drop-off in planned CapEx and confidence in the economy. We know the shutdown had a big hit on consumer confidence. We've seen both of those rebound. So if there's going to be softness, it'll be in Q1. Some of the monthly data has been troubling, to be honest. I mean, you look at the orders for capital goods, they're not what I would have hoped. But I think people miss the fact that the underlying strength in the household sector, 70% of the economy, means that there's going to be good sales out there somewhere. And as long as the jobs keep growing, we see wages go up, there's no reason to worry about that household sector. It's a foundation on which we can build the rest.
How likely are these programs to materialize, Doug, knowing the cost that you've just gone through in terms of the Green Deal? Do you think we'll still see this continue to get more momentum?
So here's how I think about it, Maria. I mean, people want a clean environment. People want people to have health insurance. They want people to have a job. These are good intentions, and those intentions will not go away. The question is, do you want these programs? And the point of trying to put some dollar cost on them is to try to help answer that question. Is this the best way to get to those perfectly sensible societal goals? I think it'll be hard to make the sale for these particular programs. They are very, very top-down, government regulatory, intrusive programs. They have big changes envisioned for the institutions in this country. Every one of those guaranteed jobs would be a union job. And it's hard for me to imagine that will gain a lot of momentum in the years to come.
All right, Doug, it's great to have you on the program. Thanks so much. Douglas Holtz-Eakin joining us there.